evening all. Ira Epstein of Linn & Associates with your metal market wrap-up for this Monday, December 28, 2020, about 6:05 p.m. Central Time. Merry Christmas to all. Very shortly, a Happy New Year. And with that, I want to be certain to say Happy New Year to all of you because my last set of updates this week will be on Tuesday, tomorrow, December 29th. After that, as they say, I'm going on vacation. I rarely take them, as you all know, but I'm going to take them now. I won't be back until at the earliest January 7th, Friday. So I get back into Chicago on the 6th, and then on the 7th, I will take off from there, and I hope to be able to do some updates over the weekend for you. So look forward to that. For those of you that are paid subscribers to my daily research, you might miss a small heartbeat on Wednesday, but as I'm traveling, but you won't miss much after that because with my computer with me, as long as there's an internet connection, you will get what I have to put out for you in terms of my morning subscriber and my Spider ETF videos. I have every intent of still doing those for you. Now, when we look at the market, what did we have? We came in and through the weekend, we saw that the president signed the COVID bill. We saw today that the House of Representatives, just about 30 minutes ago, passed the $2,000 instead of the $600 provision. It now goes to the Senate to take up that vote, so we'll see where that all goes. They were arguing and debating the next vote, which is going to be the one to override the president on the Defense Act. We'll see where that goes. But traders are looking at first, what is the 2,000 versus the 600? What are the chances? January 5th, you're going to have the runoff in Georgia. I'm not a politician, so I can't even begin to tell you what's going to happen in the Senate on this. I can see both sides of the argument, and I think everybody wants to get it to play the best way they can. The House did that. It passed by 2/3, and there was a number of Republicans that crossed over to get this vote passed. That was impressive, too. In the metal markets, a little bit of everything. Dramatic move up in the silver that didn't quite hold the best of it. It gave back about half the gains. And the gold market really got hit. You're going to see that at the end. It gave up literally all the gains. And if you're trying to expect an awful lot in the last few days of the year, it's often difficult. You know, I can put my tongue and bite it in parts because if you looked at what Bitcoin did, it was up $3,400. It's a dramatic move. I mean, a big move to the upside. Bonds and notes giving up a little bit of ground because now we have to consider how much of a relief package have we just passed. We know we did the 2.3 or 4 billion. Are we going to add even more to that? And as we've heard the Democrats say, this is the down payment on the next step. Is this really a stimulus package? We'll worry about that later. But if you look at the weekly chart of gold, it is down $2. What I tell you, it got up over 1,900 today, and it couldn't hold that value. You can see it spiked all the way up, couldn't hold it. We'll see why. What is the rule if you get up to a Bollinger Band top? You remember? First time you hit it, be it on the upside or the downside, that is where I contend the pros take money off the table. Some people have written me, can I prove it? No, I'm not interested in proving it. It's what I teach. You're watching the things I teach. I'm not about saying that this guy did that. How would I know that? It's proprietary what they do. But what I do see is where the market stops so often when it does that. And why else would it do that unless the big boys are playing it that way? So you put that together, my 50-some-odd years of charting experience, talking to the pros, seeing what they do privately in many of the trade rooms over the years, and you get a feel. Do I know what every algo trader out there is doing? I certainly don't. Don't pretend to. What about the swing line study? Well, today you had an outside day to the downside. That's right. This low today of 1873 took out yesterday's low just by a tick, but it did it, and you closed lower. So now you have a pattern on the swing line of lower highs, lower lows, and that stays that way unless over the next 2 days you take out that high. Now, if you were to take out today's high, which was 1904.10, I'd call this a bear trap, and I'd look for the market to move up to the Bollinger Band. But we don't know where that's at yet. Let's first look at moving averages. I plot, when I look at charts, sometimes the 200-day. Other times I don't. You'll ask me why. Futures contracts are very different than stocks, ETFs, spiders, and the like. Why? Because the life of a futures contract in many markets doesn't show you volume like this and trading like this. It'll start when they do a rollover of a contract, and other than that, some of them are even what we'll call synthetic closes, where it would be based on computer formulas that at times the exchanges have to generate to do that, but once it comes in, you go. Well, I don't consider a computerized generated close to be that important to me, so I don't always include this. Markets that have a good history, I generally put it on the chart. What we have here is the 200-day average, in red the 18, and the 100. We have the swing line study right here, which those of you that take my charting course, you know what that's about. In looking at this chart, the swing line is down, but the market is trading over the 18-day average. I define bias as where the market is in price to the 18-day average of closes. When it's over it, bias is up; under it, bias is down. And that's a filter on the swing line. So I have the trend down, the bias up. The two wipe each other out. I look at where the Bollinger Bands are. Now, you don't have to believe my theory. I'm not begging you to, but it's what I would expect to see the resistance area. Now, that area can change, and the market can do different things depending on the pattern it's coming out of. This was more of a sideways pattern. You attempted a breakout to the downside and had a miserable failure, went to the upside for a breakout and came back down. It can go different ways, but I'll stay with my rules. My rules are the pros come out here, my rules are the pros come out here, and what did you really give up? Then you're looking for the other trends to come in. That's my thinking. Doesn't mean it's always right. I agree with that. So in looking at the market right now, I've got the trend down. The market's hit upside resistance areas, and in the slow stochastics, the market has worked itself out of being overbought, just sort of drifting here now under the 70 level. I don't see a thing on that chart. The gold-silver ratio still favors the silver. As this market continues to move to lower values, it means you need less ounces of silver to get 1 ounce of gold. So now we're down to the 70 level. That tells me that silver is stronger than gold. And you can see the silver chart went to its upper Bollinger Band, and while it gave up ground, which I would expect there, not a lot of it. Trend up, higher lows, higher highs, bias up. Momentum has worked off the overbought condition, but just more of a gain tonight, maybe even as much as another 3-4 cents. You might get that red number over 70. That keeps me away from the market. It would be overbought. When we come to the copper market, you tell me where the resistance was today. You went up, challenged that upper Bollinger Band, and backed away. That's what you're looking for. You're looking for zones like that. Now, you came out of sideways action here, and then you latched on to the upper Bollinger Band. That is called, I termed it this year, a gorilla glue event. It's when the market just every day keeps hitting it, and what it often causes, it'll bring up the slow stochastic study to it. It's a much neater trade when the stochastics are already embedded and then price latches onto that and it follows it. In this case, you kept latching and forcing it, and then the two kicked in together, and it culminated with the market getting into the 360 area. What is the trend right now? There isn't one. You have a higher high, a lower low, and you're stuck trading against basically the 18-day average, excuse me there, and the upper Bollinger Band. What about the platinum? Lower highs, lower low, but you're over the 18-day average, so the bias is up and you're overbought. Typical year of the end, you have to wonder what's going on, but a nice rally into the end of the year, as you can see. What about the Palladium? Let's back off here. Hasn't hit that upper Bollinger Band in a while. You hit it today. I think you're pretty sorry if you didn't get out there at the 23.89 level. They finished at 23.51. That's a lot of money. And now you've got a market with tonight's action where you have a lower low, a higher high, no trend, and I'll argue that I still believe that that is what you do with those numbers. Now this year, when I get back from my vacation, I'm going to do a study for you. Actually, let's call it an advanced course on this thinking and prove points to you, show you how I think you play it, and what you do is you turn away from these markets with the slow stochastic. So it's going to be 2-3 part series. I'll be laying it out in part on my vacation. Probably get to recording this at the end of the month, I would assume, and it's not a one-day event. It's going to take me a little bit. It should be ready for you, and I'll be talking about that end of January, sometime in February. That is my goal for it. So another 4 weeks to 5 weeks when I get back. I'm not going to work on this too much when I'm gone. What about the dollar index? Well, you had this arrow pointing up with that higher high, but now with the action you just had, you'd eliminate that. You'd got lower highs. This low's under that low, lower lows. You're back into a downtrend. The market's worked out, excuse me, of being oversold. I'm going to look for resistance around this 90.50 level. If the market wanted to negate everything on the chart, you'd have to hit 90.59. I think the bears still control the market going home, however. As I said, often when I go away or if I get ill, I still put out a lot of my research. This summer I had a foot operation in the hospital bed, and I was there 2 or 3 nights. I was putting out my nightly update. So you can't say I'm not a worker, but that's how I relax. Other people have other ways of relaxing. But if you're looking for someone this year to be, think of it like a mentor, where you get to, in my live webinars, talk with me, and they'll be on a regular basis in 2021. You might want to write me a note. I will answer my subscribers. I typically don't answer my non-subscribers about what to do and how I'd answer questions that they have. Those that are paying me, it's like, you know, you're paying me a fee. I'll do my best to get back to you if it's a relevant question or one I understand. I cover all these markets in a certain way, and I know time's both of our enemy. So on this, I have a sidebar, and you pull it and it lights up in bright letters, tells you where we're at with it. The cost, basically the cost of coffee. $7.95 for the first 30 days. After that, if you want to stay, it's $15 for every 30 days. After that, you can buy a 1-year subscription. That runs $156. Pretty inexpensive, if you ask me. My videos last 20 to 25 minutes on average. How do you get this? Go to our website, www.iraepstein.com. Under the word research, it's all explained there with the different programs, and that's your sign-up area. Again, I will be here tomorrow. That's it until, at the earliest, January 7th. In the meantime, Merry Christmas to everyone. I hope you look for me. I will leave these videos up for a little bit, so I'm not going to wish you yet a Happy New Year, but that'll be tomorrow, and I'll sneak it in anyways. Happy New Year.